Yes, 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 yes. Namaste, man. Welcome back to the channel. Got a new board here, got a new setup I'm working on. Try to bring you a little bit better information. Let's look at, now a lot of you know I call my trading strategy the money flow, right? But the original money flow and where I got that term comes from my first book, You Don't Have to Die Broke. And that's where I first started using this term. And then I realized that as I taught it, that it's not just a trading strategy, it's a way of life, it's a way of living. It's a way for average people, like anybody, man. Blue collar people, just normal people. Like, how do they become millionaires? How do you become financially free? And what I think I'm gonna show you is the basic blueprints, the path. This might take a couple videos, okay? But it basically starts like this. You have a job or some way of making money, right? And we call that in the book, in chapter 1, entitled The Money Flow, we call this a well, right? It's symbolic. It's one of those wells where you drop a bucket down in there and you pull up the lever and you pull up some water. Old school shit, right? Wells are income. However you make your money, that's the well. As you pull it out, you have 3 buckets that you got to put money in. If you get these buckets out of order, if you get them out of whack, and I guarantee you have them a little bit out of order right now. Now, I'm not saying you can't prosper. I'm not saying you can't build wealth. I'm not saying you can't get ahead. What I'm going to try to show you is the most effective, efficient, and fastest way to go from 0 to $1 million. Now, in the middle of 0 to 1 million is a lot of shit in life that's going to happen to you, and we're going to try to prepare for that as well. All the money that comes out is symbolic to water. In the Bible, water was very symbolic to life. It's life, okay? So everybody, this bucket over here is called necessities. This bucket's called savings. This bucket's called investing. Here's what most people do. They make money at their job, right? They put a bunch of money over here in necessities, and then they kind of half-ass do some investing, and they got a little bit of money saved. And what they're doing is they're putting a lot of money, and then over you may have like kids' college fund, right? Save for a new car, whatever, blah, blah, blah. And so you have all these buckets and you're just putting little drips of water in all these buckets instead of focusing and concentrating and doing it in the most effective fashion or the most effective order. Like you should not be investing if you're loaded up in debt. Now that's going to be controversial. There's going to be people that don't like to hear that, right? Because you feel like maybe you're not going forward. Listen, debt is investing in reverse. It is. I'm not talking about real estate debt. We'll get into that, okay? We're going to get rich with real estate debt. I'm talking about car payments, student loans, credit card bills. If you're holding balances on credit cards, it's because you're living above your means. I can't fix that for you. You have to fix that for you. If you're doing that and you're holding debt while at the same time investing, you understand you're just adding $1 here, taking $1 off here. You're not getting anywhere, okay? So if you owe $1 and you have $1, you have 0. That's the way accounting works, okay? But people don't see it that way. They see they have $1, and they don't really see the debt as being negative investing. It is negative investing. It's the opposite of investing. It's actual inverse investing. Debt is what pays my dividends. Debt is what pays my interest, okay? But everyone has common bills, right? Electric bill, you got electric, you got insurance, right? Maybe you got a little bit of a car payment. I'll give you a little bit on that. You got, this and that, but school pay, you got all these bills over here, right? Then you got a whole bunch of shit in here probably you don't even really need, but you still have, and there's nothing wrong with that unless you're all out of whack. There's nothing wrong with nice things like I have a Rolex watch. I don't have any debt. I can buy any watch I want, right? But if I had this and I owe a bunch of debt, that would be really stupid. Let me say it again. If I have a Rolex and I owe a bunch of debt on dumb shit like boats, or credit cards, that's not smart at all. That's me faking. This is not really mine when I owe other people, okay? So what I want you to do is to get really rich, not fake rich, like actually have money. I want to put you on the other side of the cash register. That's what the money flow is about. Eventually, we're going to create more wells, okay? This is going to become part of it. We'll go ahead and draw those out right now. What this is about, you may have heard me talk about the 8th day. And if you follow my stories, you probably get sick and repetitive of me. You're like, man, this guy's always talking about work. He's always saying do this. Because I'm trying to get rich. I can't make any excuses for it, man. I'm going to be honest with you. I'm trying to make like $500,000 a year. And that's that's really important to me because of some goals I'm trying to accomplish by the age of 55. So I've set some goals for myself that are really hard to hit. And I can't hit them by 55 unless I really, really focus on them. Now, here's the difference. I love this. I love what I do. I love these goals. I get great satisfaction out of working, completing jobs, and pushing forward. I love it. I love it more than I love other things. And so it's easy for me. I don't really feel like I work. Other people think, man, you work all the time. Not really. I'm just doing what I like to do. Whenever you can operate in the zone of you're just being you, like get up in the morning and you just do you all day, when you can do that, you are free. You are rich. And I am rich beyond my wildest dreams. I haven't had a job since I was 32 years old. I'm 31 or 51. Do the math. I haven't worked for another man in a long, long, long time. I go on vacation when I want to go on vacation. I take days off when I want to take days off. The reason is I got the money flow down and I did it religiously. And to this day, it is my religion. This is how I live. I eat, breathe, sleep the money flow. So first thing we got to do is eliminate the credit cards, the school loans. Now, some of you guys are going to argue with me and you're going to say, I know, because you're so smart and you went and got all that education and now you have a master's degree and a doctorate degree, and you're going to insist that instead of paying off my loan, I'm going to go invest. And it's because you're so smart. But you see, every dollar you invest, you're still broke, dude. You owe $1, you have $1, you still have $0. So for all of that intelligence, it didn't teach people finance. Get rid of the debt. The moment you get rid of debt, I'm going to try to show this in later videos. When we get down into the compounding curve, instead of dribble, why don't we just jump ahead? Because we have so much money, we make so much money. We're not saving $200 a month or $300 a month. We're saving $3,000 a month, $5,000 a month, and we get to rocket into the compound curve. That's what happens. See, when you don't pay out money to people, guess what you have? Money, right? It's not complicated. When you don't have student loans, credit cards, and car payments, you have a bunch of money. When you consistently, over a period of time, invest aggressively, guess what happens? Your cash flow, your income can go up. It doesn't have to go into a 401k. The 401k was created by the government to assist average people to retire. It's a decent program. It's decent. If you happen to have a good one, you're blessed. If your company happens to match you, you're beyond blessed, and you should be doing that. If you're not too smart. Listen, if you have a shitty 401k, create your own. You can open up an E-Trade account, an M1 Finance account, and you can put your money into an index fund if you're just getting going. Keep it simple. You're not trying, that's not trading, okay? We'll get to the trading part. The trading part is going to come over here. Maybe trading is going to be another well for you eventually, but it's going to fall in order, okay? So first we're going to attack debt, and while we're attacking debt, you can be learning trading, right? You could pick up my book, right? You could get a subscription to stock charts. You could start paper trading. You could put in 4, 5, 6, 7 months of learning to trade. In the meantime, you're attacking this debt, this student loan, so that we actually have money to actually do some real. It doesn't do any good to take a $500 trade, and you make $100. That's not setting you free. But when you take a $5,000 and make $2,000, that could pay your mortgage difference. Or take it to $50,000, right? We can't take $50,000 trades if we don't have money. So we got to get money into the account. So first thing we're trying to do on this thing is necessities. You got to tighten up. I don't keep budgets. The way I don't keep a budget is I go over here and I create these other wells. These other wells create more income. This income allows me to be a little loosey-goosey, so to speak. Meaning I make so much money that I can eat what I want, drive what I want, buy what I want, live what I want, do what I want. So my goal is to make a lot of money. That's one reason you'll see, like, I have goals to 55, right? My goals to 55 is I'm trying to get a lot more properties and a lot more money in the stock market. So that requires me to do things. And I love those two things. Like, my purpose of owning stocks isn't to spend the money. It's to build the businesses. Like, you don't understand the creative journey that it takes, the study, the time, the research, it's art, man. It's art to find a good dividend paying company. And then it takes great discipline and courage. All these attributes that make people great, that's what makes people great investors. The reason people don't invest is they don't have courage, and they've never looked at it as an art. It is an art to take money and make money with money. It is one of the greatest things you can do, because when you're 70 years old, you don't lose your job. Let me say that again. When you learn to make money with money, when you're 70, you don't lose your job. You can do your job from anywhere. On a beach, you can do your job. On vacation, you can do your job. When you learn to make money with money, and your money makes more money than you need to live, you are free. And that has always been my goal, human freedom. That's it. My goal's never been to be free 2 days a week. So when people push back on me and say, oh, you work a lot, I know, because you value 2 days a week, I value all 7. Say that again. You value 2 days a week, I value all 7. I mean, I'm trying to get all 7. So by the time I'm 55, I'll never work again unless I just want to do it. Right? I could do that now, but my number's not big enough. Everybody's got a number you're going for, right? And for me, when I hit it, I'll probably just keep going because I love what I do, man. I don't work. I don't. I do what I like to do. So I think that's the purpose and that's the goal. So if you own a business that you love, you make something, you create something, you're doing something, then you're already free, man. Now let me show you what to do with that time, your talent, and your treasure so that you can leave a legacy. You can take care of your family and your kids for generations, right? That's also what the money flow is all about. So the first thing we do is we knock out debt. I have a whole chapter in the book. You don't have to die broke on debt. We don't need to spend a lot of time on that. A lot of people can help you. Dave Ramsey has a lot of great strategies for debt. All you wise guys that have better plans, but you're still in debt, you're not that smart, okay? So when you come up with, I'm gonna attack this interest rate and that interest rate, that ain't your problem. The problem is you have debt. Get rid of it. That's your problem, okay? Next we go to savings. Inside of savings, the money flow takes it one level deeper. And it's called a DO. Now this will confuse most of you. And I get a lot of resistance on this, especially from young people. The do-over account is to do your life over. When you get sued, when you get fired, you go through divorce, when people hunt you down, when you did something wrong, it's do-over time. This money is protected. This is not invested. And this is going to hurt some people because they're going to see this money is sitting there and they're like, oh, I got to invest it. No. The very fact that you have this allows you to invest aggressively with your other money. See, the reason people want to invest their do-over account is they don't think they can make other money. But when you start getting in the money flow and you create 1, 2, 3, 4 ways of making money, you have money coming in every day or every month. So you don't need to mess with the do-over account. So this becomes just a position, a cash position. And I know you're going to have people say cash is dead and blah, blah, blah. Listen, when COVID-19 hit, if you had a big ass pile of cash, you'd have felt a lot better. So people that say crash is trash and crash is dead, that's nonsense. Those people have never owned 15 or 20 rental properties and 10 of their renters didn't pay. Believe me, the one thing they wanted was cash. So, it's very easy to sound smart and actually be stupid. Let me say that again, it's very easy, especially among influencers and gurus, to sound smart, and yet they're actually stupid. The advice they're giving you is not smart, and they've never actually been in the situation that they're advising you for. What I am talking is exactly what I do, how to go from $0 to $1 million as a blue-collar person. That's what I'm going to show you. Now, if you can figure out how to do it faster, God bless you, go do that, okay? What I'm showing you works. So we're going to start building on the savings. This is going to take about 10 years to create the do-over account. But the do-over account first starts as a savings account, what you might call an emergency fund. But I want to take the emergency fund over time to something bigger, way bigger, okay? And we'll talk about ways you can store it besides just cash. You could have a little Bitcoin there, okay? You could put it a little bit in Bitcoin, you could. You could put a little bit in gold if you insisted. You could pay off a piece of land. You could have your home paid for. That's what I did with mine. When my do-over account got big enough, I just paid my house off. Now I have no mortgage. I could easily borrow against it. But guess what? I got to get money back into the do-over account. So there are some things that you can exchange the do-over account for. Now, why did I say home? In the state of Texas, we have a thing called a homestead exemption. They can't take my house if they sue me or anything. So I locked up money, and now that money is appreciating at 5% a year. Right? It's locked up. The only person that can take my house is the IRS. I can't lose it in a lawsuit. A lot of states have this. Check to see if your state does. If you do, that's a great way to store up money. Okay? So we're moving on. And I talk about this, and you don't have to die broke, about the do-over account. This is all started, getting rid of debt, setting up the savings, starting the do-over. We haven't started. We're just dripping into it. We got 10 years on this, remember. And then we start investing. Investing is going to look like buy and hold stuff, okay? It could be as simple, this could be as simple as an S&P 500 fund. That's the easiest thing you could do, an index fund, basically, okay? Now you might say, well, what about technology? What about, listen, it's an index fund. It's not for you to trade it. That's not what this is. This is about you looking at the history of the stock market, and it goes from left to right. The stock market is rigged. It goes up all the time. I don't give a fuck what any of your friends say, your conspiracy nut friends. None of them say they are all wrong. The stock market is rigged, and it goes up due to inflation, more and more people, and less stocks involved. So as more people vie for less and less stocks, guess what? Stock market goes up, plus the government rigs it to go up. The market has gone up since it started. In the meantime, it comes down. And so what we see when we really start looking, let's take this down, is that the stock market, the S&P 500 averages about 9% a year. And it doesn't look like this, right? It looks more like this. Now I'm going to show you how to spot these as we move deeper and deeper into the money flow, and how to allocate your money better, and how to target business development companies, closed-end funds, REITs. At what time in your life should you be buying those? Should a 21-year-old be worried about REITs or dividends? No, I don't think at all. Your job is to get a bunch of money that you can invest. When you're 21, I think the last thing you should be worrying about is a Roth IRA or any of that. I'm not saying don't set one up and throw a little bit of money at it. You should. But what you should be looking at is how the fuck are you going to level up? Because job number one is income. People miss this. It's not investing. Your primary mission is not investing, it's income. How do you get income? Well, money could get you income. How do you figure? Well, you could buy real estate. What does real estate produce? Real estate produces cash flow that you can put in your pocket this month. Boom, your income just went up. Not only is it an investment in the sense that real estate makes money four ways, right? Cash flow, but that goes right into your pocket today. That goes to your balance sheet as income earned, right? What else we got? We got appreciation. That's the investing part. This house is going to go up on average of 4 to 5%. If you were in Austin this year, it went up like 30% or some crazy shit. So real estate goes up over time. Oh, by the way, they're paying down the loan. So you have these built-in factors into real estate that make it not only income, but also an investment. That's why I'm so big on that, okay? And I own 15 properties, and that's why I do it, because it becomes a business. And so for me, this generates, like a six figure a year, gross income that I get to peel money off. It's money that I could use today, but it also is an investment in the sense that the whole portfolio is going up. So if I got 15, let's say they're just worth 100,000, which they're worth more than that, but say they are, that's 1.5 million. That's going up, 5% a year, and then the loans are being paid down. I get to keep the margin, right? And so the secret to wealth is having money you don't need. Well, I don't need that money. So every month that loan is successfully paid, I made a little bit in equity, and the house appreciated a little bit. Now multiply that times 15, plus I put cash in my pocket. And so I thereby create an investment that is also a business, and that becomes a well up here is real estate, RE for me. So I have my primary business, right? And then what? Real estate. What else could be a business for me? Well, I sell my book, right? So books could be one for me, right? What else? You see what I'm saying? Well, I manage properties, right? So property manager, right? And so these things all produce cash flow, which goes into what? To the well, which then distributes first to the necessities. Do we need anything in savings? No. Maybe we drip a little into the do-over account, right? And then what? Then we push our money into investment. And what are we starting with? First, we're doing our long-term, which is either an index fund, or if you go to chapter 10 of there, we talk about the dogs of the Dow. You could easily go to M1 Finance, open up an account, right? If you go to my newsletter, petersreport.com, there's a link. Give me a little bonus if you did it through me. But you could go to page 14 or 17, I think, of my newsletter, and you'll see my buy and hold portfolio. Now, I've been building this portfolio for 20 years, owning these stocks. I recently read a survey that said the average person owns their stocks 3.2 years. That's terrible. I can't even imagine that. Go look at McDonald's. What if you only owned it 3.2 years? Imagine if you'd owned it for 20 years. It is a no-brainer. When you start this buy and hold, don't constantly be looking at those stocks saying, I want to roll this out and put that in. Don't do that. If you want to add a new stock, you add new stock with new money, man. new money, and then you collect the dividends from the old ones. And I have stocks that I've owned for 10, 15, 20 years that are now, 400 and 500% higher than what I paid. The dividends are up 3, 4, 500% from what I was paying. So as their price goes up, they raise the dividend. And so some of these dividends have doubled and tripled since I purchased the stock. The stock is, I put 4,000 in, it's now worth 12.5. The dividends tripled, and I only ever put 4. Now go do this deal 10, 15 times. This is the power of building out, your buy and hold dividends. And at some point, guess what? I can ring the register and I can collect those, and then all of a sudden, that dividend goes into what? Income, right? So my point is, this is not about retirement. That's not what this is about. I don't give a fuck about retirement. I think retirement's stupid. People who retire is because you had shitty jobs you didn't like. My goal isn't to teach you to stay at a shitty job you don't like. I'm trying to show you how blue collar people go from 0 to $1 million or in excess of that, but a path, a blueprint of how you can do that. Now, this was just part 1. We're just getting started with this concept of the money flow and how we're going to do it. We're just touching the basis on it, man. Stay with me, man. We're going to do this through a series of videos.